Hey traders, Akil Stokes here, and welcome to another episode of the Trading Blog. I want to start off by saying this. As a man, I feel as if it's very important that we're able to admit when we're wrong. So I want to take a few seconds just to say that I was wrong. Dear Mr. Groundhog, I apologize. You were right. We did have 6 more weeks of winter. Spring was not here, and I shall never doubt your greatness again. Now, for you guys that are overseas, we do a funny little thing here in America where in my home state of Pennsylvania, we have a groundhog that comes out once a year, and depending on whether it sees its shadow or it doesn't see its shadow, it predicts whether winter is coming or winter is staying or spring is coming. And I personally think it's a bunch of junk, bunch of malarkey. However, each and every year, this groundhog seems to be right. So there you go. I will zip my mouth because we have a massive snowstorm right now hitting us as we speak. But enough about that. In today's trading blog, we're going to talk about something pretty cool. We're going to address the question of knowledge, and is too much knowledge a good thing or a bad thing? But first, I want to say, if you hang around until the end of the video, I want to share with you an opportunity to join my March Madness bracket. Yes, we're starting a pro traders bracket over on ESPN.com for all of you guys that follow college basketball. So I'll shoot in the group name and the password at the end of this video so you can join us for some NCAA March Madness fun. Now, is knowledge good or bad? Too much knowledge good or bad? That's an interesting question, and I'm kind of coming up with this topic, as always, off of personal experience. That's what I like to bring you guys in these blogs, or just my thoughts for today. It's a chance for me to share kind of some insight of what's going through in my trading and in my mind. And for me, it's also a chance to kind of reflect on the day that was. And I was thinking a lot about knowledge, mainly because I've been testing out an indicator that I haven't used in a long time. You guys know I'm essentially a pure price action trader. The only indicator that I typically keep on my chart is the relative strength index. I'm not a big fan of moving averages, Bollinger Bands, MACDs, anything like that. I don't have anything against them. I would just rather read a price chart. However, recently I've been doing some testing on the stochastics indicator. And this is something that I used to use a long time ago. And in fact, I used to use everything a long time ago. And this is kind of where, I guess, too much knowledge, knowing too much can kind of handicap you. Let me ask you guys this. Have you ever been that indicator that had a price chart that had a million billion indicators on it? It sort of looked like this, where you had more indicators than chart, and in order to take a trade, you need the MACD to be here, and the stochastics to be there, and the ARUN to be here, and the CCI to be doing this, and price action at the top of a Bollinger Band, but not underneath a 200 period EMA, but then that 53 period moving average had to cross the 200 at all the exact time to take the trade. And what happened? Don't mention pivot points in Fibonacci, right? Then what happened? You probably never took the trade. By the time you got 4 of your signals to line up, the 5th one veered off, right? And you had that kind of paralysis by analysis type of deal. And I think of myself back in that day. Let me stop jiggling the desk here. I think about myself back in the day when my goal was to become so knowledgeable about everything that I was never able to do anything. I studied so much about candlestick patterns. I studied so much about pivot points, about this indicator, that I thought that I can outsmart the market by using everything, and it just didn't work out. Once I started turning my trading around, I really adapted more of a simple approach where it's really just the candlesticks and, again, one indicator, and using price action to read momentum, using price action to kind of read oversold and overbought conditions. And that way has worked very, very good for me for the last 6 or 7 years of trading. And initially I thought to myself, well, you know what, Akil, it's bad to know everything. It's bad to have all of this knowledge because, it's just going to cause you to waste it. And that's not necessarily true. I think of knowledge as being kind of like a toolkit, right? For you manly men out there, you probably have tool garages. I wouldn't put myself in that category, but I have tools, scattered around the house in different places. But I think of it like a toolkit, right? where in your toolkit you have a number of tools that you use for most of your projects, right? You're going to use screwdrivers, you're going to use hammers, you're going to use wrenches, stuff like that. For most of your projects, you can get away with that. However, you also have these little minor tools that are project specific, and you keep them in your toolbox. You know how to use them, but you're disciplined enough not to take them out for every project, right? You're not going to have a nail, right, and take a wrench out and try to, hit the nail with the wrench, right? It doesn't work that way. You have a specific tool for a specific project. And for the majority of your trading, at least with me, as I went to a simpler approach, most of those tools stayed inside the toolkit. Now I know how to use them, I know what they are, I just had no need for them. And then every once in a while, maybe you're approached with a project, and I'm in the process of right now of kind of doing a trading project. I'm doing some testing on simple pattern formations and looking for an alternative way to enter them. Since there's something I like, there's something that work really, really well, just I don't have an aggressive enough rule set to enter them at the speed that I would like to, if that makes sense. If you were in our strategy lab, you know exactly what I'm talking about. If you were in our live room today, you know exactly what I'm talking about. So what I've been doing lately is, as I'm doing continued education, as I'm looking at trading books, as I'm taking in the process of taking a training course, right, I'm seeing how other traders are using these different tools, and I'm able to have that knowledge to say, well, what if I took that tool and used it in this way for this type of project? And it's all trial and error. You take this tool, it doesn't work, you take that tool. But having that knowledge isn't necessarily a bad thing now, because now you have the options to kind of filter and fiddle with what you want to use for the specific intent. I hope that makes sense. It makes sense in my mind. If not, just leave a comment underneath. So when it comes to the question, is too much knowledge bad for your trading? The answer is yes and no. It really depends on the trader. It could be bad if you use it in a bad way. It could be very good if you use it in the right way, just like a toolkit, just like a person with superpowers, right? If you're a good person with superpowers, right, you can make good things happen. If you're a bad person with superpowers, you'll probably use it for wrong and make some bad things happen as well. Trading is very similar. So that's what's on my mind for today, as I kind of split the process of shoveling the rest of my driveway and getting some back testing done during this slow trading week. And I don't mean slow trading week by the markets are going to be slow. I'm in 2 trades right now, one on New Zealand dollar, one on pound dollar. Still have a position sitting on Aussie Canada, which has been there forever. But slow meaning that tomorrow we have our Fed announcement. The day after that, we have some really big news coming out of, what do we have on Thursday? Really big news out of New Zealand and the UK as well. So the markets may be taking a little bit of pause before, as nobody wants to establish a position before these big events. So what that does for me is it gives me time to actually work on my trading and get stuff done. So that's what today's trading blog is about. Now, as far as the March Madness tournament, right, here is the info. You can go over to ESPN.com, right? Go to their bracket challenge, whatever it's called. Search the group. It's called Pro Traders Bracket. Pro Traders Bracket. And the password is Trade Empowered. Love to have you join us. There's no prizes, just pure bragging rights for the rest of the year, which is better than everything else. So hopefully you join me. Hopefully you make bad picks and I win so I can have bragging rights over you. But it's all fun. I think it'll be a good time. And I'll keep you guys updated with these blogs and the Forex market preview as the tourney goes on. So until next time, traders, plan your trade your plan. As always, if you like what you saw here, do me a favor, retweet this video, share it on Facebook, get it out there, invite some more traders to join our routine conversation. And if you keep doing that, I'll keep putting these things out. So until next time, plan your trade your plan. Good luck in the markets this week. Be careful out there over the next couple of days, as there is a lot of bank news coming. Take care. All right, traders. So I hope you enjoyed today's video. And if you did, please show us by hitting that like button and subscribing by clicking the button right below. If you're looking for more educational content, feel free to head over to our tradeempowered.com website, or also take a look and you'll see more videos available for you. Have a good one.